Wall Street is in full blown panic mode after President Donald Trump's massive new tariffs sent shockwaves through global markets. Stocks plummeted at the opening bell on Thursday, with the Dow Jones Industrial Average plunging over 1,100 points, down 2.64%. The S&P 500 sank 3.24%, while the Nasdaq took the hardest hit, falling more than 4.3%. This marks one of the worst trading days since the 2022 inflation crisis. The sell-off comes in response to Trump's sweeping tariffs on nearly all imported goods, a move that analysts warned could drag both the US and global economies into recession. JPMorgan analysts issued a dire warning. If these tariffs remain in place, the US economy is almost certain to contract in 2025. The global economy won't be spared either, as key trading partners, including the European Union and Britain, prepare retaliatory measures. Amid the turmoil, investors fled to safe haven assets. Gold surged to a record high above $3,160 per ounce, while US Treasury bonds saw a sharp drop in yields. The 10-year Treasury note yield hit its lowest point since October, reflecting growing fears of a severe downturn. Meanwhile, the US dollar slumped to its weakest level in months as investors braced for long-term economic pain. JPMorgan analysts estimate Trump's tariff hike will cost American consumers and businesses an extra $660 billion per year, the biggest tax increase in recent memory. Inflation is also expected to spike, with the consumer price index projected to rise by an additional 2%. Analysts are calling this a major economic shock, one that could cripple consumer and business sentiment and provoke global trade retaliation. Leading US CEOs are already sounding the alarm. The Business Roundtable, a powerful coalition of major corporate leaders, warned that universal tariffs between 10 and 50% could inflict lasting damage on American manufacturers, workers, and families. The impact of Trump's tariffs is historically significant. According to Fitch Ratings, the US tariff rate will surge from 2.5% last year to 22%, levels unseen since 1910. That surpasses the infamous Smoot-Hawley Tariff Act of 1930, which economists blame for deepening the Great Depression. Fitch economist Olu Sonola warns that if these tariffs remain in place, many countries could spiral into recession, upending global economic forecasts. As markets brace for more volatility, all eyes are now on Washington. Will the administration reconsider its aggressive stance, or are we witnessing the start of a major economic downturn? Stay tuned for more updates.